Today is one of the most important days to be a Palantir shareholder investor because the news we got last night from Alex Karp, I was actually on the treadmill while this news came out. I was literally running. I was running to the money. I was running. And we get this news update on Twitter. I see the tweet posted literally 1 minute ago, and I'm like, this is big. This is big. Alex Karp drops a letter to shareholders informing us that the historic S&P 500 index fund and the committee that decides what companies and the criteria that determines which companies get into that fund, no different than the Grammys or the Oscars. There's all these different overlord Illuminati committees that ultimately make the rules up. And, some rules make sense, some rules don't make sense. Have officially decided that if you have a majority share class structure that is F-class shares mean FU shares. No, they mean founder-led shares, basically giving founders full control of the company, and has 51% majority of those shares being allocated to the founders, then you are now finally eligible to be included into the S&P 500. That was not the case before. Apparently, you could have F-class shares, but if it was more than 51%, it was not enough to be included into the S&P 500, and that decision changed yesterday. Letter by Karp. Some of the most significant technology companies ever created have been built and led by founders. The market understands that this is anything but an accident. The retention of control and therefore freedom in crafting the shape of an enterprise, commercial or otherwise, is often what enables an organization to construct something consequential in the face of doubt and even dissent. Speaking as a founder myself, obviously, I resonate with this, right? If you give the founder control and you trust in the founder, at the end of the day, it either fails or it wins, but it's not going to happen because of something else other than the founder's vision being executed, especially when you're talking about something that truly has to be founder-led. And what truly has to be founder-led to me is a company that matters. We have built software platforms for defense and intelligence agencies across the United States and around the world, including for military partners operating on the front lines of the war in Europe. Our work can be controversial. These two sentences are what I mean by if the work matters. Snowflake can get rid of their founder and put in Frank Slootman and do full execution. I personally do not believe they matter as much as Palantir. So, when people are saying, well, you have all these other companies and you have executioners at the top, it's like, you don't need an executioner. You need a founder, because the vision of the company that needs to be executed cannot be done by an executioner. It has to be done by someone who is a founder/operator, and more importantly, the founder, because the vision is what the byproduct of the operational side of the business comes from the founder's vision. But we have beliefs, and I will stand by them with our partners when it advances our interest and when it does not. I mean, a clear example is not investing in Russia and China when investors told them to do it. If they had done that, Palantir would be dead by now, right? They would completely have ruined the trajectory of the company. And a true, operator, someone who's just trying to look after business, a Frank Slootman, maybe they would have gone into Russia and China, right? And these are the things that matter when it comes to founders. The concentration of control over an enterprise's risks, but to some degree of insulation from the outside world, is often necessary in order to build something differentiated and lasting. Basically, all my analysis I just did above, right? Differentiated and lasting. What does that mean? That means founders have control over their vision. That's why Karp's been here for 20 years, and it doesn't seem like he's leaving. The company that determines the composition of the S&P 500, an index of arguably the most prominent and significant corporate enterprises in the United States and by extension the world, have decided this week that companies such as ours, whose founders retain effective control over the corporation through a separate class of shares, are now eligible for inclusion. The shift is a consequential one, not only for the markets, but for the country. It will help and encourage and enable technology firms in the United States to preserve their independence and therefore retain their advantage. We believe that the full impact and significance of this change will reveal itself over time. This is a big deal. Now, why is this a big deal? I want to pull up an article real quick that just shows the very basics of what it means to be included in the S&P 500. There are some certain requirements that matter, and the biggest requirement is 4 quarters, including the current quarter of reporting earnings of, you guessed it, GAAP profitability. Why does GAAP profitability matter? Because the people who decide if you're allowed to be included into the S&P 500, they want to, make the argument to the public that, look, this company has at least been profitable for the past 4 quarters. So if you do invest in them, it's not that they're guaranteed to be profitable, but they have shown that they can become profitable, and that's why it is a good thing to invest in them. Now it makes a lot more sense to me why Palantir really tried to become GAAP profitable by doing all the little accounting gimmicks that they had to do in Q4 2022 earnings. Because, hey, if they had a feeling that S&P 500 inclusion was upon the rise, right? They had some intel that by this time things are going to change. Founders, majority F-class share structure companies are still going to be eligible, man. They need to get profitability, because if you have the F-class shares and you are now eligible, then the only thing stopping you is literally profitability. And so as a result of that, I don't know what Q1 earnings on May 8th are going to get us, but my gut tells me we might have a chance to be profitable again, if nothing other than the sheer nature of the fact that Palantir wants to maintain profitability this whole year, not just for the year, but quarter by quarter, because they want to get into this damn S&P fund, because it is very important to get in this S&P fund. And here's why. So the S&P 500 is an equity index made up of the largest 500 companies in either the NYSE, NASDAQ, or SPOE. Let me zoom in just a little bit. The S&P 500 is calculated by adding each company's float adjusted market cap. In order to be included, you have to have at least a $12.7 billion market cap. Palantir has that. A majority of your shares in public hands. Palantir has that. And be a public company for at least 1 year. Palantir has that. Then the other thing is actually becoming profitable. So you have to have at least 250,000 of its shares traded in each of the previous 6 months, most shares in the public hand, have a positive sum of the previous 4 quarters of earnings as well as the most recent quarter. So the S&P 500, for those super unfamiliar with it, is just a index fund of the 500 largest companies in America, or I believe across the entire world. Google, Facebook, Amazon, Apple, and I'm forgetting, and Microsoft comprise 20% of the S&P 500. So the other 495 companies comprise the other 80%, which is kind of insane, right? 5 companies comprise 20%. Apple's about already 7.5% of the S&P 500. So, when you buy the index, you're buying a significant piece of those 5 companies. And when you buy these 5 companies, you're also seeing how it influences the larger index, because if these companies drop on a day, then, the S&P 500 will drop on a day as well. I want to go to this article from November 20, here we go, from November 2020. And this is what happened when Tesla was going to be included into the S&P 500. So Tesla stock has jumped nearly 40% since the announcement that it would join the index, bringing its year-to-date gain to nearly 580%. That was 2020 was a crazy year, but they announced it around June, July of 2020 that they were going to be included, and November is when it started to ultimately start happening, and I think by December it fully happened. There is currently over 11.2 trillion assets benchmarked to the S&P 500, with roughly 4.6 trillion of those in total index funds, according to the S&P Dow Jones Indices. So Tesla, we saw it go up 40% just within those 4 months of the announcement that it was getting included into the S&P 500. Now, Tesla is not, Palantir is not Tesla. I don't think that's going to happen in this case. I don't think we get the 40% run up the same way it does, unless earnings go really well over the next couple quarters. But what it does show is that investors want your company to be included in the S&P 500. Why? Thousands of institutional hedge fund managers, capital allocators, large institutions, investors, etc., need to have exposure to your company, need to have a piece of your company if it's included in the S&P 500, because if they're owning a piece of the S&P 500, they are theoretically owning a piece of your business. Palantir has largely not been exposed to the vast majority of institutional investors of the world for a variety of reasons. One of them is they haven't been profitable. One of them is, they've been struggling to maintain above $6-7 worth of a stock price. Business, a little bit of a black box, right? Companies don't really know exactly what they do. They haven't been the best at marketing, getting their word out there. They've only been a public company for about 2 years now. They haven't grown, exponentially. So they haven't really been on the public radar to be able to be included in all these other institutional investment funds. I mean, think about people like Gary Black, right, that run a hedge fund that's primarily rooted in investing in Tesla. Let's say he believed in Palantir. Let's say, just like he has a portfolio allocation to Google, let's say he did some research on Palantir and really believed in it. He could invest in Palantir, right? He's an institutional investor, and that would be good, because not only does he have massive influence, but that is another institution, even if it's a small institution in the broad scheme of things, entering into Palantir. I just met with a hedge fund about a month ago in New Jersey, not a hedge fund, like an investment fund that bought Palantir shares at $5 in 2018. They got invited to FounderCon, right? They're close with the company, and they have a significant position in that company, and they want that position to pan out over the next decade. And so there are little mom and pop, funds that, like the one I visited, which is, there's a lot of money, but it's not billions of dollars. And then there's billion-dollar institutional funds that could get access to Palantir as a result of it being included in the S&P 500. And it gets the global name recognition that is required for the company to actually start getting eaten up by investors. Alex Karp, as much as he hates Wall Street, he recognizes how important this is, which is why he put out this letter. The letter was actually philosophically crafted in an interesting way, right? Because he was trying to justify why they haven't been eligible for inclusion outside of profitability, because of this whole idea of like founder-led visions and companies. And I resonate with it. A lot of shareholders might not resonate with it. They're like, screw you, like, you know, to get the stock price up, we don't care about your founder-led vision. But I mean, if you're investing in Palantir, you're investing in the founder at the end of the day, right? You're investing in the guy that you think can get it done. That is what the investment thesis is. That is why the risk-reward scenario might be asymmetrical, and it might really be something good because you trust that founder has your interests aligned and really cares about the mission of the company. The business stuff will work itself out if the mission gets executed. And so him wanting to retain control, I understand it, even though I know a lot of investors do not. And now that they're eligible to be included in the S&P 500, it's just a question of can they become GAAP profitable? And that's why he put out that letter yesterday saying, hey, this is the time for us to do it. I think it would be an embarrassment, honestly speaking, if they don't maintain GAAP profitability in Q1, Q2, Q3, and Q4 of this year, but they're like bragging about, you know, like why would you brag about being profitable the quarter before? And B, why would you make this letter? Like, why wouldn't you let it just go under the radar? Why do you want to bring attention? You know, get rid of those operating margin slides in the deck. Just like you're right. Like there are certain slides Palantir left off, and they honestly shouldn't have left it off because some of the numbers look bad. But why would you make this such a public thing about like, hey, if we're profitable, we get inside the S&P? It's like just get profitable, then just get into the S&P. Don't make it a big deal, and then the next month you're like, oh, by the way, we're not profitable. So this whole letter I sent out to become the S&P, we don't even have a chance to get into it for another 4 quarters. Versus now it's another 3 quarters. So, I mean, look, I think this is good news. I think this means it would be weird to not be GAAP profitable for Q1, but you know, let's see what happens. Those are my thoughts. Thanks so much for listening, watching. Make sure you subscribe to daily palantir.com/subscribe. You would know this news if you were subscribed to the newsletter. So definitely check it out. Thank you guys so much for listening, watching. I'll see you in the next one. Today is one of the most important days as a Palantir shareholder investor because Palantir shareholder investor. What that is.